Hello again, everyone. It's Vince Forer here from TradeWinds.com, and this is our update for April 9th, 2017. Let's take a quick look at how the markets finished off last week. It was an interesting, interesting finish to the week. We had the employment situation report out on Friday morning, and it was much weaker than expected. Came in at 98,000 new jobs versus an expected number of 185,000, so less than half. And I really thought the market would go into a tailspin from there. It didn't. It held on very nicely, still finishing slightly lower, though. The Dow was down just under 7 points, while the S&P 500 was down 2 points. The NASDAQ was down just 1, so it was completely flat sort of day, while the Russell was completely flat, up 0.14. So very, very quiet day. Bonds did jump initially and then pulled back, closing lower by half a point, while gold gained almost 3 and crude finished higher by about 40 cents or so. Now, we do have earnings season coming up. This week, a number of the big name financials kick off earnings season. So this is the time of the year, especially with everything else going on politically and otherwise, a great time to be very cautious with this market. Earnings, I think, are going to be a big driver of what happens over the next month or so with this market. So I'm going to tread lightly here. And one of the things I suggest you look at is stepping back and using the basics. In other words, whatever strategy you're using to get in and out of stocks, use the basics. Draw some trend lines. Look for channels, that sort of thing, that will give you clear breakout signals. So for example, here on the Dow, if you just take these pivot lows and pivot highs here, and let's just draw trend lines such as this, okay? What we see is a wedge, and we're right into that corner here, the wedge. We're going to get a breakout one way or the other any day now. So even, even if you see some sort of candlestick pattern here or any sort of other pattern in here that gives you an idea or a trade setup, stick to the basics and wait for a proper breakout using these methods. Always look for a previous high to break out of or a previous low, that sort of thing. Look at the S&P 500. Very similar picture here. If we draw these trend lines, okay, we're in a wedge situation. Not as tight as the Dow, but we should see a breakout here very soon. If we look at the Russell, now in this case, we have a channel formation. And so breaking out of this one way or the other should happen very soon. Let's be cautious here. Wait for a proper breakout and then take it from there. Now, this coming week is going to be a short week. We have a holiday on Friday. All right, but it is going to be an important one. Not only do we have earnings season coming up, but there's a number of reports due out. Monday, we have the labor market conditions report, and Janet Yellen speaks. That will be interesting. Tuesday, we have Redbook and Jolts report. Wednesday, we have MBA mortgage apps. The Atlanta Fed business inflation expectations report. It's not one we hear very often. It's going to be a good one. Thursday, jobless claims, PPI, consumer sentiment. We also have Baker Hughes rig count and money supply. Now, Friday, although the markets are closed, we do have the consumer price index report. We have, retail sales, which are going to be important, and business inventories. And of course, you should always keep an eye on the news or out for any news on the Syria or North Korean situations. Tensions are still high. That could potentially have a huge impact on the market. So we'll stay on top of everything and continue to brief you on it. But that's about it for now. Enjoy the rest of your day and your weekend, and we'll see you on our next update.